JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of May 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channels, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to go on jfdbank.com and yep, click on the research tab right there on the top, and yeah, it will take you to this page, which I believe you can find quite useful. So now then, jumping into the charts, the first one I want to pick up here, and just a quick update on Nikkei 225. So the index kind of remained today above this 28,000, or actually it remained above the 100-day EMA here, but still stayed below the 21-day EMA. So in other words, it's stuck between these two little EMAs here, and it's not really moving anywhere. So the idea that I mentioned well, actually, I was mentioning this whole week, that in order to, let's say, consider maybe a move back down here, we need to see a continuation hold up here below this hurdle, below this upside line. Of course, this hurdle, by the way, is the 28,760 zone, marked by the inside swing low here of the 30th of April. So so far, everything's kind of working according to the plan. We are getting that hold up here. Also, the 21-day EMA is helping out, so let's see if we can actually drift back down here and move to the downside, because what I said to you previously as well, that in a way maybe all this could be seen here as maybe a temporary correction before another possible leg of selling, because if, let's say, we're assuming that this little pattern here is something of a rising wedge pattern, now then in that case we understand that these patterns tend to break to the downside according to all the TA rules, of course, and yes, we could see further declines. However, still the break of the lower side of the rising wedge here would be needed. I mean, we cannot really assume here just kind of that this is exactly what's going to happen. No, I mean, we need some confirmation, and at this point I would say that wait for that violation of the lower side of the rising wedge here. If that happens, then yes, lower levels could be met again, but we have seen this happening several times where it kind of goes the other way. I mean, the other direction. It doesn't really sometimes follow all the standard TA rules. That's the reason why I'm always saying wait for that confirmation break. And for the upside, what I need to hear is, well, at least a push above, not only above this 28,760 territory, but also push back above this upside line, taken from the low, the 19th of March. And then, of course, we'll take it from there, guys. I can see in the chat room here a couple of people saying good morning. Good morning to all, to you too. So Evu, Erika, so yep, good morning to you. I hope you're having a wonderful start of the day, and in general, everybody, I hope you're all having a fantastic start of Thursday. Also, basically, the Shanghai Composite, that's an interesting one. And yesterday, and actually from the beginning of this week as well, what I was mentioning here, that if we stay above this 3,577 territory, then my next target is the 3,637 mark here. As you can see, we came very close to testing it, but didn't really hit that level. So, and then we started retracing back down. So, I would say that this idea kind of worked out partially. So at the moment, I'm going to take a bit of a careful approach here, cautious approach. What I'm going to do here is I'm going to recycle this rising channel. I mean, we broke it to the upside, so basically no longer valid, this rising channel formation. So what I'm going to stick to right now are couple of upside lines here. So the first one being this one, taken from the low the 9th of March, and the other one, and let's recycle the upper side of the rising channel here, and the other one is this one here. Also a bit of a tentative one, but nevertheless, let's keep an eye on it. And in a way, even if we see a drop lower, as long as the this short-term tentative upside line continues to provide support, then yes, higher levels could be met. So if this upside line gets broken and we see the price falling somewhere, actually let me just reuse one of the lines here. So I'll first of all, actually, I'll get rid of this one. I'm going to remove it because we came very close to it. So that's why, I mean, this line didn't really prove to be that significant. I mean, it was a good aim, but as you can see, we stalled a little bit below that. So let me just redraw this chart very quickly. So for the downside in the near term, for the downside, I would need to see a break of this upside line and a drop below the 3,530 territory right here, marked by the high of the 17th of May. And for the upside, well, again, what I want to see here is if we're not going to get a bit of a corrective move here back down. If we drop back below the 3,577 territory, then yes, I'll consider this as a corrective move here, and then I'll keep an eye on this upside line, because if it rebounds from here, it could push higher again. But for the upside, if you're a little bit on the cautious side, you could just keep an eye on the current high of today at 3,626, roughly around there. If we get a nice pop above it, this of course confirms a forthcoming higher high, and more buyers could join in. So keep that in mind, guys. Now jumping into Dax, the German index, and yeah, so yesterday we closed lower. We ended up dropping back below this April high near the 15,502 zone. So yep, the big question here is what's gonna happen next. I mean, if we take a look at the cash index, let me just quickly have a look at that one, where the price is currently trading pre-market open. So at around 15,442, so slightly below where it closed yesterday. So in a way, the idea that I mentioned to you this week for DAX, that if we see that a creation of a new all-time high, but then the same daily candle ends up falling below the previous all-time high, this could lead to maybe a bit of a corrective move to the downside. And so far, this is exactly what's happening. So in that case, what I'm going to keep an eye on here today is this 21-day EMA, because I want to see if it's actually going to provide decent support. If the index continues to slide and falls below the 15,215 territory right here, now this is where it could become a little bit more interesting for the sellers. And yep, we could consider maybe a bit of a larger correction here to the downside, because let's not forget that in a way, even if we see a strong move to the downside here, as long as this upside line stays intact, guys, this one's taken from the low the 19th of March of 2020, all this could still be seen as a temporary correction before another possible leg of buying. So in a way, don't get spooked. Of course, we'll be very careful in that situation, but nevertheless, keep an eye on this one, because like I said, even if we see a massive drop here to the downside, it might start looking like a very bearish situation here, but don't forget about this upside line as well. DXY very quickly on the dollar index. So had a nice good push higher, and as you can see, didn't really stay below this 89.68 zone. I spoke about this level yesterday as well, so we needed to see that daily candle to remain below it. So yep, instead we had a reversal, and what I said to you then, guys, that even if we see that reversal, still keep your eyes on this downside line taken from the high of the 31st of March. For now, we're getting a nice beautiful hold up here, Again, the same story as always. I mean, I'm not really kind of saying something new here. The same story again. Keep your eyes on this downside line. We need the break. We need to see a break above it. Also, just to kind of maybe strengthen the upside scenario, a push above that 90.8, 29 zone right here could be ideal as well. And if also, if we're talking about ideal scenarios, I mean, if also the daily candle, for example, manages to stay above the 21-day EMA, now this is where it could become very, very interesting, and we could then maybe aim for some higher levels. But again, at the moment, we only can go from what we have. So at the moment, what we have a downside line, which is still providing resistance. So in a way, the trend is still to the downside. But if you want to get comfortable with the downside, wait for that drop below the 89.68 zone, and then we could get a little bit more comfortable with further declines. For the upside, I would need to see well, the daily candle staying at least somewhere above this 90.28, 29 zone, and then yes, we could take it from there. Silver. Silver is stuck, I would say. So, of course, overall, it's trading above this nice upside support line taken from below the 31st of March. So everything's looking nice and dandy here. Yeah, at the same time, it's also kind of struggling to form higher highs. And instead, it's trading below this downside line. So what we have here ourselves is a nice little triangle pattern. If we only let's say, take a look at it from the mid-May perspective. Excuse me. So of course, the stronger trend is still to the upside, so that's why we need to kind of stick to the upside. However, we'll take a cautious approach, and we'll wait for a break of this downside line and a push above the high of yesterday near the 28.23 zone. And then, yes, we'll take it from there, guys, just to be, like I said, on the safe side. And if we get a nice push above this, then, yep, my next target will be the current highest point of May near the 28.75 zone. And then we will take it from there. Maybe the next target could be this little high here, the high of the 2nd of February, or maybe it could go all the way towards the highest point of February. However, I'm going to keep it short and simple for now. I'm just going to stick to this idea for the upside. For the downside, we need to see a drop below the 27.20 zone, approximately around here, and then, yes, at the same time, what we'll get a break of the upside line, and we'll drop below the 21-day EMA. So, in a way, this kind of increases the chances for a possible kind of move even lower. But at the moment, guys, the only thing we have to do here is, well, to play a bit of a waiting game. Quick update on WTI oil. I mean, I'm not going to spend too much time on this one because I've kind of talked a lot about WTI oil this week, but basically the same game plan remains. As you can see, this barrier, the 66.40, continues to do its job, continues to provide good resistance. We need that daily candle to kind of push and stay above this barrier. I mean, we keep getting these false breakouts here, but so far this is not really helping the bulls. Neither for the bears. I mean, the bears are also cautious here. They want to see what's going to happen, and probably the slightly a bit more comfortable level for the bears could come on a break of the 63.80 territory right here. As you can see, in the past it did act as a very nice area of support and resistance, of course. So basically, just to kind of protect ourselves here a little bit more, a drop below that area here, below the 63.80 could be let's say, the more favorable option for the sellers. I can see in the chat room here, Reza, yes, good morning to you too. Hope you're having a wonderful start of the day as well. Now, coming back to the Brent oil here, and yeah, I mean, this idea so far worked out. I mean, previously when I talked about Brent, I said that let's keep an eye on this upside line. If it provides good support once again, then yes, a nice good rebound here could be possible. And look at this move. I mean, boom. Great stuff. However, for my question here is right now, excuse me, guys, my voice is going down a little bit. So my question here is basically, yes, we managed to climb above the 21-day EMA, and in a way, everything's kind of looking quite positive. Okay, guys, sorry for the loss of sound a little bit here. So, excuse me, guys. Oh, something's wrong with my voice. Okay, need to calm it down a little bit. Now, okay, coming back to Brent oil. So Brent oil pushed above the 21-day EMA, so that's great. Okay, positive kind of news here. However, well, we also, of course, rebounded from this upside line, so also good positive news. However, we're still not really near this key important resistance area near the 69.90 zone, and as you can see, that's the high of the 5th of May. That's not the highest point of May. The highest point of May is right here, but near the 70.22. But to be honest, I'll stick to this level because even though we had an overshoot here on the 18th of May, still we didn't really see the daily candle closing above it. So basically, kind of shows that this is quite an interesting area to watch. So if you want to be a little bit more on the careful side, probably just at this point you could wait here for that move above that hurdle, above the 69.92, because again, what could happen here, for example, we could see maybe a drift back down, maybe a test of the 21-day EMA. If it provides good support again, then we could see a nice pop higher. And then, of course, again, the same question remains: will we see a nice pop above the 69.92 territory here? If we do, then yes, higher levels could be met, guys. For the downside, I'll take a very kind of careful and cautious approach. I'll wait for a break of this upside line and then a drop below the 64.60 territory right here, which, as you can see, continues to provide decent support. Now, jumping into Bitcoin very quickly. So, so far the idea is kind of working out. I mean, my idea was that if we get a push higher, but the 200-day EMA continues to provide resistance, then yes, another slide here could be possible. And yeah, for now, I mean, we did push higher, but it didn't really reach the 200-day EMA, and now we're seeing another slide lower. So, at the moment, I will say that I'll take a very, very careful approach here because, again, I don't like these situations. I don't like these scenarios. For me, let's say for the upside, what I would need to see here, well, now I would need to see at least a push above the 42,101 zone right here, and because at the same time we would get the rate placed above the 200-day EMA, and more potentially buyers could join in. However, and then basically, sorry, I got distracted here. Evo, I mean, up to you, whatever you feel comfortable with, and that's the reason why I said that if you want to go short on that, but you know, it's up to you. But that's the reason why I said that a daily candle needs to be. I need to wait for a daily candle to end above that hurdle in order to go for some higher areas. So, well, anyway. But everybody, like I said, everybody does what they're comfortable to do. Now, coming back to Bitcoin very quickly here. Basically, like I said, for the upside, for me, the more comfortable level here for the upside is the 46,000 territory here. But of course, I'll start looking at some higher levels if we get that push above the 42,101 zone. For the downside, again, this is the thing. For at the moment, I mean, as long as the rate remains below the 200-day EMA, then there is a good chance for Bitcoin to drift lower. Ethereum also got stuck here. I mean, it pushed higher nicely, yes, but it got stuck below the 21-day EMA. So for me, that's kind of a bit of a very cautious moment here. Basically, in order to go for some upside, yes, wait for that push above the 21-day EMA, wait for that daily candle to stay above it, and then we could start maybe looking at some higher levels. But even then, we'll be very careful. We do have that little tentative downside resistance line taken from the high of the 12th of May, which in a way could provide a bit of a hold-up. So even if we climb above and stay above the 21-day EMA, still this downside line is the one to watch. Ripple. So Ripple is also struggling with this 1.0606 territory. I spoke about this one this week. Yep, I said to you that I need to see that push above that area, above this barrier, in order to get a little bit more comfortable with the upside. But at the moment, we're not really getting that, and instead, we're having a nice good hold up near this area. This area continues to act as a nice area of a nice hurdle or a resistance hurdle, and is falling back below the 100-day EMA. So kind of doesn't look very promising. However, for me to, let's say now at this point, to let's say get a little bit more comfortable with the further declines, I would prefer actually to wait for a drop below the 0.7910 territory, because at the same time we would be placed below the 200-day EMA, and then potentially more sellers could join in. But because all this territory could be a very, very tricky one. Now, jumping into a few pairs very quickly before I run out of time, guys. I mean, I'll have to kind of rush through this because my colleague is stepping in after me just in a couple of minutes. Basically, NZD/USD, just a quick update. We pushed higher yesterday above the 0.7305, but we failed to remain above it. So this is what I said to you yesterday, that when I was covering NZD/USD, that in a way, if we do get that daily candle to remain above this hurdle, then yes, we could get a little bit more comfortable with higher areas. But at the moment, we stayed here, so that's why we'll take a bit of a neutral stand here, or even I would say cautiously bullish, because still the trend is to the upside here, yep, there is a chance maybe we could drift a little bit lower and then rebound and then push to the upside. Either way, a break above this 0.7305 level is needed. For the downside, it needs to drop below the 0.7152 territory, somewhere around here, in order to get comfortable with lower levels. I use the CAD very quickly on this one. So, of course, the dollar index is helping here. The strength of the dollar is helping this pair to move higher, and, well, I mean, I would say maybe finally, but again, the moment we'll be very careful. And this is what and this is exactly what I talked about when I was covering USD CAD. Basically, for USD CAD, what I was saying, that we were stuck in this little triangle pattern, and we need to see a clear breakthrough one of the lines before, let's say, getting comfortable with the next short-term directional move. But for the upside, I also needed to see a push above the 1.2144 territory right here. Well, again, this area did act as a fantastic area of resistance so far, of course. Don't get me wrong, this is an early morning still. Now, I mean, if you want to go for some higher levels, as you can see, this barrier did provide decent resistance. So if we get a break above this area, then yes, we could start aiming for some higher levels. But to get a little bit more comfortable with further extensions to the upside, a daily candle staying above this area, or even above the 21-day EMA, and that would be even better, could do the trick for more buyers. GBP CAD, similar story, but here, I mean, we are also near an important area. This 1.7123, also talked about this pair recently. As you can see, we keep getting these overshoots here above this barrier, but we don't really get that daily candle to stay above it. So, and once again, this morning, we also had a nice push above it, but we're struggling to climb and stay above this one. So, okay, so basically, again, the same story here. I mean, we need that confirmation daily candle close, well, not a close, but staying, at least the rate staying above this area, and if it does that, then yes, we will go for some higher areas. GBP USD, very quickly on this one. So dollar index is strengthening here, and it's not working well here for this pair. However, this hurdle, the 1.41 zone, is doing its job so far, but this is what I talked about yesterday, guys, when I was covering GBP USD, that if we drop below the 1.41 territory right here, then yep, I will consider a bit of a larger correction here towards this upside line, and then we'll take it from there. Also, another quick update on Euro against the South African Rand. Now, it's something that I looked at recently, and recently yesterday, and basically this is what I said to you guys, that if we manage to remain below the 16.9564 territory, then yes, Good news for the sellers. Further declines could be possible. And look at this. I mean, look at this beautiful move here. We got that strong move lower. We stayed below it, and now my next target is the 16.6761 zone right here, and that's marked by the highest point of January of 2020. So let's see how this is going to play out. Slightly below that, we do have this little inside swing high of February 7th, 2020 as well, near the 16.5854. I'll keep that in the chart here for now. Let's see if this is going to get tested, but for now, my main target is the highest point of January of 2020, which is roughly around the 16.6761. Euro against the Swiss franc. So haven't looked at this one for quite a while, but basically very, very interesting. So overall, we are trading above this nice upside support line taken from the low the 18th of May. So yep, good news here for the bulls. However, from this other perspective, you can see that the pair is drifting and trading below this downside line here. Some of you might even say maybe it's actually in a falling channel here. So yeah, I mean, that could be the case, of course. It's not an ideal one, I would say, but yeah, we can keep that on the chart for now. Let me just probably adjust the lines here in order for it to look a little bit more presenting. There we go. So a nice, beautiful falling channel. Again, this falling channel could be seen as a temporary correction because, as you can see, I mean, we could maybe class this this whole pattern here as maybe a bullish flag because we kind of have a pole. Kinda, and if we actually look at the monthly chart, maybe that's gonna work well. Let's just have a look. Okay, not a very ideal scenario. I mean, maybe on a weekly candle, yeah. So okay, so something like a bullish flag, something, but probably more leaning towards just the falling channel here. So in a way, let's keep an eye on the falling channel. But let's be very careful near the 200-day EMA and near this upside line. Because if all this provides good support, then yes, we could see a nice rebound and a push higher. But if you're a little bit more on the careful side, what you can do here is just wait for a break of the upper bound here of the falling channel, and then kind of aim for some higher levels. Because again, let's be careful. I mean, at the moment, yes, it is a falling channel, and then the trend is kind of the short-term trend is still to the downside. So that's why, I mean, yeah, it could still continue drifting lower. And finally, EURUSD. So here we drifted back down, but we're still above this upside line. So I'm not going to spend too much time on this one because I need to wrap it up here. But basically, the same game plan remains. I mean, nothing has changed. We need to see a nice, good, stronger move above this 1.2243 territory, somewhere around here, and we need to see the daily candles to stay above it in order to go for some higher levels. But for the downside, I need to see a drop below the 1.2161 territory right here, and also below the 21-day EMA in order to go for lower levels. So for now, I'm kind of neutral, or I would say even cautiously bullish because of the trend is still to the upside. But yeah, because we're very close to this upside line, I'll take a bit of a I'll stand away from this one a little bit. So guys, that's it for this session. Thank you very much for watching and listening. Just to let you know that there is not going to be any Traders Espresso tomorrow together with the tea time. So join me later on today at my Traders tea time today. Yep, everything's fine with today. So yeah, join me later on around 12:30 GMT time. But guys, for now, I hope you have a fantastic trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.